Northwestern University and the University of Chicago may get a reprieve from paying an endowment tax under the new federal tax overhaul, but both could end up shelling out millions in the near future. The legislation imposes a 1.4% tax on net investment income at private colleges and universities with more than 500 students and where the market value of endowments equals more than $500,000 per student. At least 50% of a school's students must reside in the United States. That would put University of Chicago and Northwestern right on the bubble. At $7.82 billion and $9.8 billion, respectively, the schools carry some of the largest endowments in the country. The University of Chicago is closer to being tax eligible because of its smaller enrollment. But exactly where that cutoff lies is open to interpretation. Even the universities are confused. We still aren't real clear on whether Northwestern would be affected by the excise tax in the next year or not, a Northwestern University spokesman, Alan Cubbage, said. University of Chicago leaders also do not know whether the tax would hit the Southside University, according to a spokesman, Jeremy Manier, who said unresolved details in the legislation were making it difficult to assess the bill's full impact. The new tax on endowments at certain nonprofit private universities will have a negative effect on the ability of universities to make vital, long-term investments in education and research, he said in a statement. Still, even if they escape the tax for now, both universities will most likely pay it in the near future, a prospect that even Northwestern acknowledged. We are fully anticipating that, if not next year then in later years, that we will be subject to a tax, Cubbage said. When it occurs, we will pay the tax. The new tax provision marks a striking shift in how the federal tax code treats the nation's richest universities and their burgeoning endowments. Endowments are long-term funds that provide sustained support for a university. In many cases, donations to endowments are restricted to specific purposes such as to fund a professorship, or financial aid, so the money cannot be distributed solely at a university's discretion. But earnings from an endowment also can provide critical support to a university's annual finances. Endowment dollars were 10.5% of University of Chicago's 2016-17 operating budget, according to its annual report. Historically, university endowments have not been taxed because they are part of a nonprofit entity, the university, that is tax-exempt. But now, university endowments will be levied similarly to how the government taxes private foundations. It is expected to generate $1.8 billion in federal revenue over 10 years, according to an analysis by the Joint Committee on Taxation. To determine eligibility for the tax, the law stipulates dividing the fair market value of the endowment at the end of the preceding tax year by the full-time equivalent enrollment. If that quotient is above $500,000, schools will owe the tax. That, at least, is the general idea.